Shares of Charles Schwab slipping after reporting a revenue miss. Net income also falling down to nearly $1 billion. And joining us now for the read-through on retail trading is Patrick Moley from Piper Sandler. Patrick, good to have you. So Schwab's guide, I guess, was a bit light. We got numbers from Interactive Brokers yesterday. What's this telling you about the state of the retail trader?
Yeah, so I think that Schwab results today had more to do with retail behavior from a cash standpoint, what retail customers were doing with their cash balances. Over the last year or so, Schwab has come under significant pressure as customers have moved cash out of their sweep brokerage deposit accounts in search of higher yields into things like money market funds. That's put significant downward pressure on Schwab's net interest margin. It's forced them to tap high-cost short-term funding. But what Schwab showed today was that in the last 2 months, we've seen transactional cash balances, those brokerage sweep cash balances, increase 2 consecutive months. It's the first time that's happened since the Fed started hiking rates. So what that tells us is that as we look into next year, assuming deposits remain on the balance sheet, we don't continue to see a runoff, Schwab should be able to start paying down those balances, and that should lead to NIM expansion and NII growth into next year. And one of the things that I think corresponds with those balances or those deposit balances not rolling off the balance sheet is retail investors identifying opportunities in markets. You look at this coming year, we have an election coming up. We have potential for rate cuts. So I think investors are looking to maybe hold on to cash. They're looking to possibly deploy it into opportunities they see in the market over the coming year.
So which do you like better here, Robinhood or Schwab?
Well, Schwab, I think, is my top pick for 2024. I think that we'll see some headwinds over the next year. Their guidance today came in a little bit, I think, softer than what a lot of the street was expecting. But if you look into 2025, if you look into those outer years, there's a lot of things to get excited about with Schwab. Last year, they worked to integrate all of the legacy, or 90% rather, of the legacy TD Ameritrade clients onto their platform. That was a deal that was closed in 2020. So for the first time this year, those TD Ameritrade customers will have access to Schwab's full suite of product offerings. So in addition to expense synergies from bringing those customers over and consolidating everything onto one platform, I think there's significant opportunity for revenues as well. If you look at TD Ameritrade customers, there are only 10% of those customers utilize advisory services. Schwab customers is closer to 20%. So if Schwab can bring that 10% up closer to what their customers have historically trended around, I think there's significant opportunity for revenue growth there as well.